So big tech is doing something it almost never does. They're going into massive debt. We're talking hundreds of billions of dollars borrowed fast, all to win one race, artificial intelligence. But here's the real question. What happens if this bet goes wrong? For years, companies like Amazon, Google, and Meta had a simple formula. Make tons of cash, reinvest profits, grow without much debt, but AI changed everything. Now they're spending like never before. In just 1 year, big tech plans to spend $650 billion on AI infrastructure. Amazon alone raised $14.5 billion in Europe and $37 billion in the US. That's just one of the largest bond sales in history. And this isn't just servers. This is massive data centers, advanced AI chips, energy infrastructure, and elite AI talent. Think of AI like a digital factory. To run it, companies need power-hungry data centers, cutting-edge chips, physical real estate, top-tier engineers. Even Oracle is borrowing heavily just to build more data centers. And here's where it gets interesting. Some companies aren't even putting this debt on their books. They're using something called special purpose vehicles, or SPVs. Basically, they create a separate company, and that company borrows money, buys AI equipment, and then leases it back. Even XAI is trying to raise up to $20 billion this way. It's like buying a house under a different name so your credit report looks clean. Here's the twist. These companies actually have tons of cash. So why borrow? Because debt is cheap, it's relatively speaking. Investors are eager to lend, and it protects their stock price. Meanwhile, startups like OpenAI and Anthropic don't really have that luxury. So they raise money by selling ownership, which means giving up control. So this is where things get risky. So we've seen this before, right? Where? The dot-com bubble. Back then, companies overbuilt internet infrastructure, and when demand didn't show up, boom, collapse. Today's version, if AI doesn't deliver fast enough, data centers could sit underused, chips could become obsolete, debt could pile up. So this doesn't just affect tech, it could reshape the entire financial system. AI debt could hit 1.5 trillion in 5 years, could become 20% of the bond market by 2030. That means less money available for other industries, and it also means higher borrowing costs across the economy. So even giants like Morgan Stanley and JP Morgan are sounding the alarm. If AI underdelivers, revenues drop, debt becomes harder to manage, stock prices fall, and investors take losses. Then suddenly, the most powerful companies in the world don't look so invincible anymore. So here's the bottom line. Big tech is making a historic bet on AI, and they're financing it with debt. Could lead to the biggest tech boom ever, or a very expensive lesson. So which side do you think we land on? Drop your thoughts in the comments, and if you want breakdowns like this every day, subscribe to Daily News. Thanks for tuning in. We'll see you in the next one.